Hello, welcome to the live stream. Thank you for tuning in. Today we're going to be talking about Angi or Angi Home Services, Angi Leads, Angie's List, whatever it's called now. It's rebranded recently to Angi. So let's get started. I'm going to share some thoughts that I have about this company. So, slideshow mode. Hope everyone's having an awesome day, having an awesome weekend. So, Angie, what the hell is this company? Well, if you have friends who are contractors, they've probably heard of Angie already. This is a two-way marketplace. So, it matches people who want to get work done around the home or any handyman work like plumbing or roofing or home remodeling, and they match these people with contractors who want to get the work done. So this stock is a penny stock, and I never recommend anybody to get into penny stocks unless it's a really good opportunity, because when you invest in penny stocks, it's a risk that you're taking. This stock is trading right now for $1.90 some cents, and penny stocks are very vulnerable to pump and dump schemes. If you've ever watched The Wolf of Wall Street and you've seen them cold dialing people and pumping up companies like Steve Madden's shoes and then dumping the shares, that's essentially what happens with a lot of penny stocks, except there's all these legal loopholes that people use to get away from being caught. But a lot of this happens behind the scenes or behind the SEC's back, and it can be very painful to buy into these opportunities where the stock runs up a ton, and then there's a lot of retail hype because a lot of retail traders or people want to make money in the stock market. They look for the quick wins, and they buy into the hype, and then suddenly when the bubble bursts, and it can be very painful. I've known people who've lost half of their money, 80% of their money, sometimes 90% by buying into these hype stories. So penny stocks, be very careful when you touch penny stocks. You really have to look at the quality of management when it comes to penny stocks. How much skin in the game does the management actually have in their company? Because when you run into these pump and dump schemes, a lot of times these companies are just trying to use the money that you have in order to funnel it into providing for their lifestyle or their trip to the Bahamas, or to pay for their third mansion or something. And a lot of the times it's the retail investors that actually get burned. So, I'm sure you guys have heard of control the narrative. You don't want to be in that situation when you're investing in an opportunity you think could be the next 100 bagger, and then you see your money just evaporate and you go like, right? So, but I don't think Angie is this kind of company. I think it's one of those rare opportunities, or those rare penny stock opportunities that tick a lot of boxes, where they have a solid management team that has been executing for 20 some years, and I think the business also has a lot of potential to grow as well. I mean, it certainly has its down years. I mean, if you look at what's going on with Angie right now, it's not a very pretty picture. At its height, it was over $20. It was valued, I think, at the height, it was an over $10 billion company. That was Angie, and it had a lot of investors being excited. And then here you can see that during the pandemic, it just took a dip because pandemic, stocks were crashing. It's probably harder to do handyman services if people are having lockdowns over COVID, so their stocks dropped to about the $5 range, and then it ran up during the years after the pandemic, when people there was a huge demand in home services, because when you're locked up at home and you got nothing to do, one of the things people think about, especially when you got these stimulus checks getting pumped up, and people suddenly had all this money, which they may have deserved the stimulus checks or they may have not. Regardless, they had all this disposable income, and they were like, okay, well, where are we going to invest the money? The interest rates were really low at the time too, so a lot of people were incentivized to maybe take out loans from their mortgage, or to just spend a lot of money to invest in their home, whether it be upgrading the plumbing or upgrading the roof or to remodel their kitchen, fix up the electrical work to make it up more modern, landscaping. So people were putting a lot of time into their homes, and you saw Angie stock absolutely rocket. It went up really high, up to $16, $17, and then boom, it's crashed to almost below $2. In fact, below $2. So what the hell is going on with Angie? So, Angie, let me explain their business model. So, they have three main sources of revenue. And their first revenue is Angie Ads, which is contractor. Let's say you do electrical work. You can pay a subscription fee to Angie, and then Angie will then advertise a lot of your services on their website. And if you've ever been a homeowner and you need to have some sort of work done, you ever searched on Google like plumbing services or electrical services, you might see that Angie often has the top two positions when it comes to paid advertisements as well as search engine optimization. You'll see them right away. They'll say fill out a service request, and then that information then goes to contractors who then start calling you. So that's Angie. Now the other part of Angie, which is not just the ads, because you can pay for the ads, and then the contractor has to pay every time somebody clicks on one of these ads. But that leads me to my next description of Angie, which is the Angie Leads part of their business. Now, Angie Leads essentially is a service where a contractor pays for these leads to be sent to them, which may or may not be good leads, which I'll talk about in a sec. But what happens is these contractors will then call these leads, and then hopefully 1 out of 10 or 2 out of 10 of them ends up turning into a customer. It depends on what kind of service you're doing, what geographical region you're in, how competitive is the service offering that you have. But that's the idea. The other part of their business is contractors paying for Angie to send them leads on people who might be interested in home services. Next, we have the third aspect of Angie, which is their fastest growing unit. This is Angie Services. So, what they're trying to do here is if a homeowner wants to do, let's just say, a remodeling of their home, they can go to Angie Services, get a quote from Angie, and then if they say, I want to get this job done, Angie will then find a contractor to then do the job for them. So, this works a little bit like a model where, let's just say, Angie says, all right, it's going to take you $1,000, just to use an example, to remodel your home. And they'll go to the contractor and be like, okay, I'm going to pay you $800 to do this job. And then Angie takes a cut of, let's just say, 100, or in this case, $200. So that's how Angie primarily makes their money. And the home remodeling market right now is kind of in a slump. You can see that during the pandemic around 2019 all the way to 2022, 2023, there was a huge surge in demand for people who wanted to do work to remodel their homes, whether it be because of interest rate, because of a ton of stimulus that was pumped into the economy, or people just not having many options as to entertainment. So a lot of homeowners wanted to build up their homes. But that demand has kind of tapered down a little bit. You can see it really is projected to slow down in the next few years after that boom. And you see it in the companies now. You can see Angie, the stock's probably down more than 66% actually as of when this chart was created. But if you look at other companies like Lowe's or Home Depot, you can see their stocks has also been going down as a result of the macro change. And one of the important aspects to look at whenever a stock is down, it doesn't have to be a penny stock. You always have to look at whether or not this is a situation that's going to persist in the long run, or if it's just a short-term headwind. And there certainly are a few short-term headwinds if you look at just what's going on in the macro environment. So right now there is that headwind where companies that are in the home renovation space, or even in the real estate space, they're suffering as a result of macro conditions. And a lot of this could be because of interest rate hikes. It's a lot more expensive to borrow money now in order to do a home remodeling project. people have less money too because of inflation. If your mortgages like doubled as a result of the interest hikes, you have less disposable income, and that means that you maybe put off a lot of these home improvement projects that you normally would have done. And this is affecting a lot of companies within this space. Now, if you just look at companies in the home improvement space, you can see it reflected in their revenue growth as well. So if you look at Lowe's, they were doing 24% growth in 2021. It's tapered down to minus 9.17% revenue growth. Similar thing with Home Depot, though maybe a little bit less dramatic. They were growing 20-30% during the pandemic, and then now in the recent quarter ending in June 30th, negative 2% revenue growth. So a lot of these home improvement companies are right now trying to scale back a little bit. They're trying to focus more on profitability and being more efficient as a business. And see another example, which is floor and decor. You can see during the pandemic, it was like 80%, 90% revenue growth. And then post-pandemic tapered off 9%, 4%. So the home improvement economy is not looking very good right now, but a lot of this could be just a temporary headwind. And that's important to think about as an investor. You can think about it as like, is the demand for home improvement permanently impacted? In that case, we should get the hell out of all these companies. But if it's just a temporary headwind and maybe it picks up in a year, 2 years, 3 years, you could see a big upside with a lot of these stocks when that time comes. So Angi, it's a company that, unlike a lot of penny stocks, where they're just kind of like long shot bets, this is actually a very established company within the home improvement space. In fact, if you've talked to contractors or people who work in this space, a lot of them have heard of Angi. A lot of them also have heard of Home Advisor as well, which makes up part of this brand, as well as maybe other solutions as well, like Handy, which are a little bit less well known. But Angi has about 10 or so brands that it operates under. HomeStars is also part of Angi as well. That's a solution that's more prominent in Canada. But a lot of people have heard of Angi. They have one of the highest brand awarenesses for this kind of online home services company. And 1 in 7 homes in the US actually have used Angi within the past year. And their biggest competitor, because there isn't really a direct competitor to Angi, it's a very fractured market, which means that a lot of these local contractors, they're set up within like Florida or Nebraska or a certain geographical region where they have dominance, but they don't have much outside of that geographical region. So a lot of the marketing that's done tends to be geographically focused on Facebook or on Google or things like that. And a lot of the competition is also word of mouth. 90% of the people who do home services, it's word of mouth. So they ask their neighbor, hey, do you know somebody who's good at electrical work or good at plumbing? And then their neighbor is like, yeah, I know this guy who's really good at it. And that's how a lot of the times these contractors get business. And this is one of the last spaces that has yet to move fully online. So if you believe that in the future, more people are going to request home services or home remodeling or roofing work, and a lot of this work is going to move online, and there's going to be a consolidation of this around a few companies, separate from how it is now, where it's a lot more fragmented. Then Angi has a lot of runway in the future, and I think it does have an advantage. It does have Angi. People do like the Angi brand. There's also network effects as well, which is the more service providers that are on Angi, the more likely you're able to find a good fit for a homeowner that needs work done around the house. And also the more homeowners that are on Angi who want to use Angi, the easier it is to attract other contractors onto the platform. So there are definitely network effects, brand advantages around Angi, and And if you believe that in the future, as we get more millennial homeowners and we get more younger people owning the homes, and they're more likely to be online, they're less likely to have that idea of, oh, I need to ask my neighbor for help, or if they know somebody who's good in the home services section. A lot of more of these people are going to do searches online or download apps. So I think Angie in the long run has a really good runway. Now, who owns Angie? The company that owns Angie is IAC, and IAC owns about 84 or 85% of Angie in total. And this company has had a really good track record of generating shareholder returns. If you look at it from 1995 all the way to 2023, if you invested in the S&P 500, you would have got about a 10% return. And IAC has beaten the market throughout 25 years, giving investors a 13% return, which is actually quite a bit higher in 2021, but a lot of their companies fell in 2022. So it would have been even higher than 13%. In the period up to 2021. So this company has a lot of skin in the game. They own most of this company, and they've had a lot of really good success with some of their previous companies. You may not have heard of IAC, but maybe you've heard of Vimeo, or you've heard of Match Group, which owns Tinder. You heard of TripAdvisor or Expedia. These are all companies that were originally very tiny companies within the IAC umbrella, and they eventually grew these companies into billion-dollar businesses, and then they spun it out. So this is a company that has quite a lot of good track record in terms of delivering good returns for investors. And it's always good when you're investing in a penny stock and you know that there's a well-funded, established company that's behind the company that you're investing in. Because number one, it means that somebody else is going to have a huge incentive to make this business turn around. And that's what IAC has. They own a lot of this company. If Angie stock goes down, well, they suffer as a result. So you're going to have all these capital allocators who have a history of successfully building up smaller companies. They're coming in to turn around the ship. And you've seen that recently in 2022, where Joey Levine comes in. The old Angie CEO steps aside, and then Joey comes in, takes over, and is now making a lot of changes in order to make Angie successful. Another thing that's really good with having a large company own most of the company is they're well capitalized. Now, if there's any run-of-the-mill home remodeler business, small company, and then recession hits and the demand for their services go down a lot of the times what homeowners will do is they will start prioritizing certain providers at the expense of others. So a lot of these smaller businesses might actually go bankrupt during recessions. A lot of owners of these companies that are penny stocks might actually not survive the recession. But if you have a company like IAC with over $1 billion in net cash, that could really carry that business for long enough so that the recession goes away. And then when the home remodeling economy starts picking up again, then you can see a lot of upside. So that's another really important differentiator. Why is it important to have a well-funded backer for these stocks that you invest in? Another really important thing to keep in mind is that IAC spent a lot of money on Angie, which might not be immediately realized for multiple reasons. In 2017, Angie was merged with Home Advisor. So Home Advisor was this service where now it's called Angie Leads, but Home Advisor was that service before where if you were a contractor and you wanted Angie to help generate you businesses, they were going to start feeding you leads and then charging you per lead. So that was a Home Advisor business. Angie Leads was more of, or it was called Angie Ads was called Angie's List, which is an online directory for homeowners who want to find contractors that they want to use. They also spent money acquiring Handy as well, which is their services business, which is if a homeowner wants work done, they fill out a request and then a contractor comes to do the work. So IAC invested a ton of money in this company. They spent about 780 some $1 million acquiring Angi in 2017. Home Advisor at the time was doing about $500 million in revenue, had just grew about 30-40%. So they merged the two together. And in 2017, the valuation of Angi, in terms of the market cap, was about 5.7 billion. The enterprise value was just under $6 billion. So the valuation now is about $1 billion. You add in the net debt, it's about 1.3, 1.4 billion. So investing in Angi, it's kind of like, did the work that IAC've done since 2017, has it all gone to waste? Has it all just petered out to nothing? You can buy essentially what Angi was worth in 2017 when the acquisition happened for less than a third or less than a fourth of the total value. And since then, if you look at Angi's growth, you can see that since 2021, they've really done quite a good job in growing their revenues. And even if you look at Angi's revenue growth from 2017, it was something like maybe $700 million or so. And then Angi in 2023 is doing like 1.7 billion. So they've successfully grown revenue quite a bit. But the reason why there's so much pessimism with Angi right now is because recently their revenue growth has really hit a snag. You can see that revenue growth was starting to slow down, and then suddenly in March 31st and as well as June 30th, they've done consecutive quarters of negative revenue growth, and it's really getting it's really getting investors to start freaking out, and that's why you see their stock going down so much. Now, what actually happened? Why exactly did Angi start having all this negative revenue growth? Well, part of it is the macroeconomic condition. Part of it is interest rates rising, homeowners wanting to scale back a lot of their home improvements, especially when there's inflation and rising interest rates. People have less money to go around. It's harder to borrow money to do a lot of these home improvements. So that could be one of the reasons why growth has tapered off. But another reason behind all this is actually Angi's management. And Joey Levine, who's actually the CEO of IAC, just took over in October of 2022. And he made a lot of decisions to actually scale back or nuke some of the parts of their business that he thought wasn't good overall for Angi. And he, in some of these shareholder letters, he shares his thoughts where he says, "We've made mistakes with Angi. We've maybe scaled in some areas that we shouldn't have scaled in. We need to focus back on the basics. And we need to stop prioritizing short-term revenue growth at the expense of the overall health of the business." And that's something that Angi was really struggling with, because if you go online and you type in reviews for Angi, you'll see some people might have some good things to say, but a lot of people don't. And if you look at some contractors out there, they'll be like, "Angi screwed me over. They send me a bunch of leads that I don't have time to call, or are just bad leads. I call them and nobody picks up, or the information's fake." And there's actually a class action lawsuit going on for a lot of these homeowners suing Angi. Sorry, not homeowners, contractors suing Angi because they think that they were being ripped off when it came to the leads that they were given, or that there were contractors that were spending money on advertising campaigns that they would never really realize the benefits of. So Angi is suffering there, and right now the CEO is recognizing this and saying, "Listen, we have a lot of demand channels that are creating bad experiences for our customers, where contractors are complaining, or homeowners, maybe they just went online and they just casually browsed, how much would it cost for a certain home improvement project. And then what happens is they get tons of contractors calling them all around, being like, "Oh, like, do you want to do your home project?" And the homeowner's like, "What home project?" Right? So it's a bad experience for both the homeowners and the contractors, because the contractor's like, "Listen, I have to compete with six people to try to get this customer who doesn't even want to, the project isn't even something that they want to do right away." And the homeowner's pissed because they're just like, why am I getting called from 6, 7 people when I just filled out an online form? So the CEO is recognizing this and is like, listen, we got to scale back a lot of these demand channels. We got to make sure that when we bring on service professionals, that they're actually staying with Angi in the long run. And we got to stop this negative behavior that's causing, a lot of people to really not like the brand, especially a lot of this negative sentiment is targeted towards Home Advisor. Now, another mistake that he recognized is, listen, we were trying to rebrand Angi. And I think it's actually a good idea, because if you have Angie's List, which is kind of a legacy business, they want to rebrand to Angi to let people know that it also includes Home Advisor and Handy. Now, retiring Home Advisor as a brand, I think, is a great idea, because people really don't like this company, and for the reasons that I mentioned before, which is contractors are sick of getting cold called by Home Advisor. They're sick of paying for Home Advisor and them giving bad leads. People who use Home Advisor, some of them get a good return, maybe big businesses, or people who have used Home Advisor who maybe are priced more as professionals. They see some value, but a lot of people aren't. So they're retiring that brand. Handy as well. I don't think many people know about Handy. So they're merging it all into Angi. However, this short term, it creates short-term headwinds, because even though in the long run it makes a lot more sense to rebrand to Angi, because this is more of a brand that's recognized and that people like and doesn't have all the negative sentiments that are associated with Home Advisor, in the short run it's created some SEO concerns. So search engine optimization is something where you want organic traffic to come in through search engines like Google or Bing or Ask, or whichever search engine people are using. And as a result of rebranding to Angi, they lost a lot of the domain advantages that they had with Home Advisor, with Angie's List, with Handy, and it's causing less natural organic search engine optimization leads to flow into Angi, causing them to, in the short run, spend a lot more on paid advertising. So the CEO mentioned that this has cost about $1 billion in short-term, hopefully short-term profits for this company, and it's causing a lot of the revenues and profits to drag as a result. And again, when you invest in companies, you really have to ask yourself, is this a short-term headwind, or is this going to be a long-term headwind? And right now, the management team is recognizing that this search engine rebranding, even though it has long-term benefits, is creating these short-term headwinds, and they're investing a lot of energy into reinvesting into SEO in order to build up Angi's organic traffic, which they have a lot of experience doing. Another thing is something that I've mentioned already, which is that the CEO is nuking a lot of demand channels or areas that they think is bad for business, that maybe generates revenue that's unprofitable, or it's creating a lot of bad homeowner and contractor experiences. So they're turning off some demand channels that have gotten bad reviews. They stop reaching out to certain contractors who they think are probably not going to make their return on Angi, so they're not going to stay in the long run. And they're also exiting complex services. So any services that they do on the Handy platform where the homeowner fills out and then Angi then sends a contractor to do, they're getting rid of all the services that are hard to price. So then they can focus on delivering a good experience for the simpler solutions, like fixing a valve or landscaping or simple roofing, and they're getting rid of all the complex tasks that are more difficult to quote, and which it's harder to create a good experience for homeowners as well as contractors. And their goal in the future is to do a complete product redesign to make it easier for homeowners to find contractors, whether it be to utilize directories to make it easier for homeowners to find the right contractor for them, or even doing double opt-in where the homeowner wants to use a contractor, contractor wants to use wants the business from a homeowner, and then it just gets created as a business from there, instead of giving contractor leads and then them cold calling, and then the homeowner gets mad, or the homeowner gets a bunch of cold calls from contractors. They're trying to scale back that aspect of the business and instead make it more about the right contractor finding the right homeowner and the right homeowner finding the right contractor. So they're still figuring out how to do this properly in the US, but they've already done something very similar to Europe. That double opt-in idea actually came from a lot of the brands in Europe that they run, and they're going to do that in the States. And in the long run, it creates a much better experience for homeowners. And you don't get that same problem that you had with Home Advisor of like bad experiences on the contractor side and on the homeowner side. So you get a better experience, but in the short run, this is going to create short-term revenue headwinds. And that's what you've seen, where it maybe in the long run, it creates a better business, it creates a more profitable business. In the short run, in combination with a lot of these macro effects, it's causing short-term revenue declines. And the CEO is saying that a lot of this stuff is going to be mostly felt in the recent second quarter, and it's going to be getting better later on. And again, that's something that I think is very significant to think about, because if you want to make good returns on your penny stock investments or any kind of stock investment, you always want to ask yourself, is this revenue headwind or something that's driving a lot of investors to panic? Is this actually a short-term or long-term thing? And if a lot of the revenue is actually cut in favor of creating a better experience in the long run, then that means that the cuts make the business more valuable, even if the changes can't be seen for at least a year or two. But ultimately, it means that when things rebound and they cut out all the unprofitable revenue and focus on growth again, then it could be in a really good upside for whatever stock you're looking at. Now, they've already shared some graphs that shown that they've made some really good progress with this already, where if you can see, the retention for a lot of these service providers have really dropped until the month of July 2022. And with all of these changes that they're making, they're actively tracking how many service providers they're able to keep, as well as the quality of the new service providers that they're bringing on. So a lot of people are looking at Angi and they're saying, oh my God, the service providers are dropping month after month after month. Like, this business is going to the toilet. It's, don't invest in this company. Why? While the reason it's going down is because management is looking at their service providers like, okay, we're not going to reach out to this guy because, he's going to use Angi. He's going to get a lot of, he's not able to make it on the platform, or less likely to make it. So we're not going to reach out to him. We're going to reach out to service providers that maybe have more experience with, calling and generating business, or larger service providers that maybe have a whole team that can look at leads coming in and sort them out and be able to do proper estimates. And these companies are the companies that are actually going to make it on Angi, and we're going to focus on them. So in the near term, it grows service providers slower, and they're letting go of service providers that they don't think are going to really benefit from Angi. So short term causes a dip, but long run, especially if these service providers are able to stay with Angi longer, it reduces their cost of acquisition, and it also, in the long run, creates a better experience, and it's good for the business's growth, both top line and bottom line, in the long run. And I think that that's something great that they're doing. Although in the near term, everybody's panicking as a result. But I think what they're doing actually, is good for investors. So, what are my thoughts on Angi? I think this is a really good business. I don't think the company is going bankrupt, and I think these short-term revenue headwinds are eventually going to tick back up as the macro environment improves, and as a lot of the investments that management is doing for customer experience, for better matching of homeowners as well as service providers, as well as the SEO optimization with the rebranding. All of what they're doing is good for the business, it seems. However, in the short term, it creates these headwinds where people look at the revenue drop and they're saying, "Oh my God, this business is going bankrupt," or "Oh my God, this business is dying," and they forget the fact that that Angie is a good brand, or they forget the fact that you need to look long term in terms of these improvements, and that's why I think this business is a compelling penny stock opportunity, and probably one of the best penny stock opportunities out there. Is you have a management team that has a history of executing well, and you have these short-term tailwinds that are good for the long run for the business, but temporarily make a lot of people scared. And I think that makes it a great time to get in, because you want to have that long-term outlook or that insight that allows you to get into opportunities like this while they're cheap, so that you can ride them out when a turnaround happens, which I think is a lot more likely than it not happening. So, hope you enjoyed my breakdown on Angie. Thank you so much for tuning in. Let me know. Please like and subscribe. Anything, let me know what kind of content you would like to see next. Again, I just want to preface this with I'm not a financial advisor, so please take these opinions as a grain of salt, but I'm always interested in finding opportunities and sharing with you good opportunities to help all of you make money and stack your wallets, because especially with inflation these days, making good investments is very important. So thank you so much for tuning in. Love you guys for tuning into the stream, and I will see you on the next one. Thanks so much. Bye.